Hello, I'm Miguel Zurita, Managing Partner of AltamarCAM. In the context of the expectations generated by the recent performance of private markets, we are delighted to share our views on the most recent valuations exhibited by our funds. Valuations of private assets have generally evolved positively in 2022, particularly in relative terms to a historically difficult year for traditional liquid 60/40 portfolios that have experienced losses both on the fixed income and equity sides. In December 2022, at AltamarCAM, we have reported valuations as of end of September showing positive year-to-date evolution across all of our asset classes. Private equity is up by 6%, venture capital by 2%, infra by 10%, real estate by 12%, and private credit by 5%. This compares to listed indexes which are all on negative territory. This inevitably has raised some eyebrows questioning whether private market valuations truly reflect the actual situation of private portfolios. And for a number of reasons, we can comfortably conclude that as of the reporting date, they do. Despite all macro challenges, the performance of the portfolio continues to be strong across asset classes. For instance, the private equity portfolio experienced an EBITDA growth of 18% last 12 months, halfway through the year. This is also true even for the venture portfolio, who despite increased focus from managers on profitable growth, show impressive top-line numbers. Moreover, real estate and infra portfolio revenues had a solid evolution, being net beneficiaries of high inflation. In any case, we cannot neglect the fact that increasing interest rates have had a clear impact on valuation multiples, which have contracted. By no means, private equity portfolios or any private markets portfolios are immune to this, but they typically exhibit conservative valuations that allow to absorb certain reduction in these valuation multiples. Across the extensive AltamarCAM's private equity portfolio, over the last 10 years, companies experienced a 55% uplift at the time they were sold against the carrying value 1 year prior to the sale. This does not mean that the value creation was accelerated in the last 12 months of ownership, but that the carrying value did not fully reflect the true market valuation. When looking at more volatile periods, this uplift has also been positive, ranging between 25% in 2020, which was affected by the COVID-19 crisis, and plus 85% in 2021, which was an exuberant year for public markets. We have similar experiences in infra, real estate, or venture, where valuations are mostly driven by last rounds, which in the case of some of our top GPs are typically applied with a discount. The case of credit is slightly different. Positive evolution of the portfolio is driven by the floating rate nature of our direct lending portfolios that are still experiencing quite limited operational problems. The issue is whether the positive valuation evolution is sustainable going forward if the macro environment worsens as a result of prolonged high inflation and higher than expected interest rates. This could end up negatively affecting companies' operating performance and valuation multiples, which in the context of reduced valuation buffers could finally contract quarterly valuations. Our experience from the global financial crisis and COVID crisis shows that there is a time lag in valuation decreases between public and private markets. In addition to this, the latter experience a softer decrease and a quicker recovery than public markets. In summary, private portfolio valuations year-to-date as of September 22 have increased between 2 and 12%, depending on the asset class, thanks to a combination of managers being conservative in historical valuations and portfolio companies having performed very well. At the same time, the FX evolution has helped LPs whose investments are denominated in euros. Going forward, we must remain cautious. Valuation movements will depend mainly on operating performance of portfolio companies and evolution of interest rates in an eventually more challenging macro environment. Thank you very much for your trust in AltamarCAM. We remain fully committed to continue to work hard to deliver great risk-adjusted returns for you and to take advantage of the opportunities we see ahead of us in private markets. Thank you very much.